In the last chapter, we studied liquidity sweeps. We saw that price can push beyond a level, reject, and then move back inside. Now we study what often happens inside a larger move. Price does not usually travel in one straight line. It moves, pauses, pulls back, and then either continues or fails. This chapter is about understanding pullbacks and continuation without chasing every move. A pullback is a temporary move against the current direction. In an uptrend, price moves higher, then pulls back lower. In a downtrend, price moves lower, then pulls back higher. The pullback is not automatically a reversal. It is a pause, a test, or a reset inside the larger move. The important question is whether the larger structure remains intact. Continuation means price resumes the larger direction after the pullback. If the market is trending higher, continuation means buyers defend the pullback and price pushes higher again. If the market is trending lower, continuation means sellers defend the pullback and price pushes lower again. Continuation is not just hope. It needs evidence that the pullback has failed to reverse the larger move. A simple way to read movement is impulse and pullback. The impulse leg is the stronger move in the main direction. The pullback leg is the counter move against it. In a healthy trend, impulses often cover more distance than pullbacks. Pullbacks may be slower, smaller, or more overlapping. This contrast helps beginners see whether the larger pressure is still present. A pullback is not the same as a reversal. A pullback moves against the trend but does not break the key structure. A reversal starts to damage or replace that structure. In an uptrend, a pullback may hold above a higher low. In a reversal, price may break that higher low and fail to recover. This is why structure matters before emotion. In an uptrend, a useful pullback often returns toward a prior demand area, a broken resistance area, or a higher low. The market is asking whether buyers still care about that area. If the pullback slows, rejects, and price starts to move higher again, the uptrend may still be intact. The key idea is simple. Buyers need to defend the structure. In a downtrend, a useful pullback often returns toward a prior supply area, a broken support area, or a lower high. The market is asking whether sellers still care about that area. If the pullback slows, rejects, and price starts to move lower again, the downtrend may still be intact. Again, the key idea is structure. Sellers need to defend the lower high. Continuation depends on structure holding. In an uptrend, the pullback should not casually destroy the higher low that made the trend clear. In a downtrend, the pullback should not casually destroy the lower high that made the trend clear. This does not mean price must be perfect. It means the larger story should still make sense after the pullback. If structure breaks, continuation becomes weaker. A pullback becomes easier to study when it returns to an area that already mattered. That area might be demand, it might be supply, it might be a broken level from the prior chapter. It might be a liquidity sweep area that rejected and then became a reference point. The area gives the pullback a place to prove itself. Pullbacks can be shallow or deep. A shallow pullback barely moves against the trend before continuation appears. A deep pullback tests more of the prior move. Neither one is automatically better. A shallow pullback may show strong pressure, but it may also give little information. A deep pullback may give more information, but it may also threaten structure. Pullbacks can also be orderly or messy. An orderly pullback often has smaller candles, slower movement, and cleaner structure. A messy pullback may have sharp candles in both directions, overlapping swings, and unclear highs and lows. Messy does not always mean wrong, but it does mean the evidence is harder to read. Beginners should learn to respect unclear conditions. When the pullback reaches an important area, candle behavior becomes useful again. Does price reject the area? Does it close back in the trend direction? Does the next candle follow through? Or does price sit at the area and continue pushing against the trend? Continuation needs response. The response is what separates evidence from guessing. One way to study continuation is to watch the structure of the pullback itself. In an uptrend, the pullback may create small lower highs while it moves down. If price breaks above that small pullback structure, buyers may be returning. In a downtrend, the pullback may create small higher lows while it moves up. If price breaks below that small pullback structure, sellers may be returning. Continuation can fail. Price can pull back into a good-looking area and still fail to continue. The reaction may be weak. The follow-through may disappear. Price may break the structure that needed to hold. That failure is information. It tells you the market did not defend the area strongly enough. Sometimes a pullback includes a liquidity sweep before continuation. In an uptrend, price may dip below a minor low, trigger attention, reject, and then move higher. In a downtrend, price may pop above a minor high, reject, and then move lower. This does not mean every continuation needs a sweep. It means sweeps can be part of the pullback story. Context still matters. Pullbacks are harder to read inside a range. In a range, price is not clearly trending from one side to the other. A move down may look like a pullback, but it may simply be range rotation. A move up may look like continuation, but it may only be price returning to the range high. Before using pullback language, ask whether the market is actually trending. Some pullbacks happen in more than one leg. Price may pull back, bounce, and then pull back again before continuing. That can frustrate beginners who expect one simple reaction. The important point is not the number of legs. The important point is whether the larger structure still holds and whether a real response appears. Patience matters here. A beginner workflow can stay simple. First, decide whether the market is actually trending. Second, mark the structure that needs to hold. Third, identify the area where a pullback would make sense. Fourth, wait for a response at that area. Fifth, look for continuation in the original direction. If the steps are missing, the idea is weaker. The first mistake is chasing the impulse after it has already moved far. The second mistake is assuming every dip is a pullback. The third mistake is ignoring the structure that needs to hold. The fourth mistake is forcing trend logic inside a range. Pullbacks are useful only when the larger story supports them. Without context, the word pullback becomes just a guess. Here's a practice sequence. First, mark the uptrend with higher highs and higher lows. Second, mark the demand area near the higher low. Third, watch price pull back into that area. Fourth, wait for buyers to respond. Fifth, check whether price starts to continue higher. This gives you a structured way to study the move instead of reacting emotionally. Here's the recap. A pullback is a temporary move against the current direction. Continuation means price resumes the larger direction after the pullback. The key question is whether structure holds. Useful pullbacks often return to areas that already mattered. The response at that area matters, and if continuation fails, that failure is important information. Pullbacks teach you that not every move against the trend is a reversal. Sometimes the market is only pausing before continuation, but sometimes structure does break. Sometimes the pullback becomes something larger. In the next chapter, we will study reversals. That will help separate normal pullbacks from situations where the market may be changing direction.